So, what if every tap of your phone to pay, every online purchase, even just, pulling out cash,
Hmm.
what if that vanished as an option?
Hmm.
Imagine a world where your entire financial life played out, well, completely under the gaze of authorities, where spending could be maybe nudged or limited or even blocked based on. Well, that's kind of what we're going to unpack today.
Yeah, that unsettling scenario you're painting, it isn't some far-off sci-fi thing for many analysts.
Right.
And our source material for this deep dive argues it's actually a very real possibility, something being actively pursued even.
Exactly. We're diving deep into the book Digital Dollar Dystopia: How CBDCs Will End Financial Freedom. It's by Michael Rodriguez.
Okay.
Now, Rodriguez isn't just, shouting from the sidelines. He's a seasoned economic analyst and investigative
But he's
journalist.
got credentials.
Yeah, he's the author of books like The BlackRock Empire and George Soros, The Man the World Hates.
Yeah.
Titles that kind of show he's not afraid to tackle these really complex, powerful financial forces. He brings a critical eye and, well, a lot of experience to this topic.
That background certainly provides um, a strong foundation for his arguments in Digital Dollar Dystopia.
Mm-hmm.
The book represents his focused and, I'd say, rather urgent examination of central bank digital currencies, CBDCs,
Right, CBDCs.
and their potential to reshape not just our financial systems, but maybe even our individual liberties.
So our mission today is basically to dissect Rodriguez's core arguments. We want to understand what exactly CBDCs are, at least according to his analysis,
Right.
and then explore his central critique that they pose a significant threat to our fundamental financial freedom. We're going to stick just to the ideas and information presented in the book, laying out his case as clearly as we can.
Okay. And one of the initial, and I think quite provocative points Rodriguez makes, is this assertion of a deliberate war on cash.
The war on cash. Okay.
He argues that governments are actively working to discredit physical currency.
Right. Okay, let's unpack that idea a bit. Rodriguez highlights how cash is increasingly portrayed negatively, linked to crime, tax evasion, all the dark corners of the economy.
The usual suspects.
Yeah. And he suggests this isn't accidental. It's maybe a coordinated effort through media, education, even policy nudges. And it really makes you ask why this push now to move away from something that's been, fundamental for centuries.
Rodriguez seems convinced the primary driver is a desire for enhanced control.
Control.
Yeah. Cash, just by its nature, it offers a level of anonymity, right? That exists outside the direct monitoring capabilities of government financial systems.
Sure.
Whether it's in your wallet or, under the mattress. It represents this sphere of financial activity that's just really hard to track comprehensively. And that lack of complete visibility, well, it seems to make authorities uneasy.
And here's where it gets really interesting. Rodriguez points to data, I think, from the Atlantic Council.
That's right.
Showing this dramatic surge in the number of countries actively exploring or piloting CBDCs, like a huge jump.
Yeah, it's massive. We're talking about the vast majority of global GDP now represented by nations looking into this.
Which definitely adds weight to Rodriguez's question about the urgency behind this shift. Why is everyone suddenly rushing towards this?
Absolutely. And to understand his concerns about where this urgency might lead, Rodriguez then kind of digs into his view of the current monetary system itself, which he sees as inherently fragile.
Fragile. Okay.
He takes us back to the decoupling of currencies from the gold standard back in the 1970s.
Right, the big shift, when money stopped being backed by, actual gold.
Exactly. And from there, Rodriguez outlines how the modern banking system operates with fractional reserves.
Meaning banks can lend out way more money than they actually hold in deposits, right?
Precisely. And Rodriguez uses this really powerful analogy here. He describes our current fiat system, where money's value isn't tied to anything physical as like a high-speed train with no brakes, accelerating towards potential instability as debt levels just keep rising and rising.
Okay, that's a strong image. But it's when Rodriguez connects the dots between this CBDC development and the growing sophistication of social rating systems, that's where his argument takes a particularly, concerning turn.
He specifically highlights China's ambition to create this all-encompassing credit information system, covering basically all aspects of a citizen's life.
Yeah, that's a stark example.
Now, what's fascinating, and frankly, it raises some pretty big questions, is the potential convergence of these two technologies.
Convergence. How so?
Well, Rodriguez asks us to really think about what happens when a state-controlled digital currency gets integrated with a pervasive social credit system.
Okay, I see where this is going.
The capacity for really granular control over both your financial and your social behavior, it becomes almost limitless.
And this really gets to the heart of Rodriguez's whole thesis, doesn't it?
I think so.
That CBDCs represent a fundamental change in the very nature of money. It's not just about digital transactions being easier or faster.
No, not at all.
It's about the potential for near-total governmental oversight of our financial lives. And he emphasizes that, even a few decades ago, that level of control would have seemed completely unthinkable in most places.
Absolutely. And to provide that crucial context, to really understand the magnitude of this potential shift, Rodriguez dedicates a good chunk of his book to exploring the long and, frankly, really varied history of money.
Which is fascinating in itself.
Totally. He takes us back to some truly interesting origins.
Like, think about all the different forms money has taken. Rodriguez mentions seashells in Bali.
Right, where their value, which was based on scarcity, just collapsed when too many were found. A basic but vital lesson, right? About scarcity and trust.
Yeah, absolutely. Then you've got bronze tools in ancient China, or the salt bars used in Africa.
Salt bars. So valuable it apparently gave us the word salary, from the Latin for salt.
I didn't know that. That's amazing.
And the journey continues, Cacao beans for the Aztecs' currency and used for valuing things.
Right.
And those massive immovable rice stones on some Pacific islands, their value is just based on collective agreement and memory, which is kind of a surprisingly relevant parallel to how abstract digital currency is today.
It really is. Even rice in medieval Japan served as a unit of account.
Yeah.
Shows how deeply tied a society's resources can be to its money system.
And this historical tour then leads us to the rise of gold, as this dominant, almost universal form of currency.
Gold. Rodriguez details the properties that made it so appealing, right? It doesn't decay, it's rare, it's malleable.
Easy to verify its authenticity, relatively speaking. He mentions ancient stuff, like a 300-800-year-old gold pendant found in Germany, even older treasures in Bulgaria. It just highlights gold's enduring appeal.
And it's interesting, as he points out, that most gold, even today, ends up as jewelry or investment.
Yeah, underscoring its role primarily as a store of value, not just for industry.
Then after gold, he talks about silver, too, its historical importance.
Right, mentioning its practical advantages sometimes, and its connection to the word for money in languages like French, argent.
And this all paves the way for discussing paper money and, modern banking.
Exactly. Chapter 3 gets into that evolution from gold coins to paper receipts representing gold held in vaults. Basically the first banknotes.
The IOUs.
Kind of, yeah. And this is where fractional reserve banking really enters the picture banks, lending out more money than they actually have in gold reserves.
Which Rodriguez flags as a pivotal moment. It helped growth, sure, but also introduced these inherent risks. Instability, banking panics.
Right. He cites the 1907 U.S. crisis, J.P. Morgan stepping in. It's a prime example. And Rodriguez suggests this historical vulnerability is actually part of the motivation for governments seeking more direct control today.
Okay, that makes sense.
What's really insightful then is how Rodriguez draws these parallels between historical attempts to manage or control currency and the current drive towards CBDCs.
Parallels, like what?
Well, he points to things like the Greek nomisma, where the state just decreed its value, or Athenian copper coins that could only be used locally. He even brings up Roman Emperor Diocletian trying price controls, or the Song Dynasty's flying money in China, which had limits on where and when you could use it.
So his point is that governments trying to control money isn't new at all.
Exactly. That idea isn't new. What is new and potentially transformative is the technology we have now. The ability to exert near absolute control in a digital way.
Right. The tech changes the game.
He also briefly touches on that secretive meeting on Jekyll Island that led to the creation of the Federal Reserve, just underscoring the often complex and, let's say, debated history of central banking itself.
So this whole historical overview, it really culminates in the abandonment of the gold standard.
Yeah, a process Rodriguez outlines, starting with the strains of World War I, the economic pressures after that.
He highlights the challenges countries face trying to stick to gold, and then the final break during the Great Depression.
And then comes a really striking example Rodriguez uses. President Roosevelt's Executive Order 6102, back in 1933.
Yes, the gold confiscation.
Which mandated Americans surrender their gold, Rodriguez really underscores the magnitude of that action and the devaluation of the dollar that followed.
He uses the contrast, right? Between what $100 bought in 71 versus what gold from that time is worth now.
Exactly.
Yeah.
To illustrate the very real, tangible consequences of shifting fully to fiat currency money, not backed by anything physical.
Okay.
Following that, Rodriguez explains the Jamaica Conference in '76.
Which basically formalized the end of the gold standard globally.
Right, and ushered in the era of floating exchange rates we have now. He notes the perspective, which some hold Soros reportedly among them, that this effectively turned money into more of a tradable commodity, ripe for speculation.
So all this history, it sets the stage for understanding the current landscape, especially how central banks reacted to cryptocurrencies.
Precisely. Rodriguez explains how, after maybe some initial dismissal.
Yeah, they weren't worried at first.
Right, but then Facebook proposed Libra back in 2019. And that, Rodriguez argues, was a real wake-up call. It spurred central banks to actively explore CBDCs as a kind of countermeasure.
A defensive move.
Potentially, yeah. And of course, China's early adoption and ongoing pilots of the digital yuan are a huge development he focuses on.
Which brings us to one of Rodriguez's biggest concerns.
Mm.
This idea of programmable money.
Yes, this is central to his critique. He details how CBDCs could be designed with built-in restrictions, actual rules coded into the money itself.
Like how?
He mentions the trials in China with digital yuan that had expiration dates, or discussions in Russia about targeted digital rubles, meaning money that could only be spent on specific things.
Wow. Okay, the scenarios Rodriguez lays out based on that are, well, they're quite thought-provoking, disturbing even. Imagine money that you can only spend on certain things, or money that just vanishes if you don't spend it by a certain date, or maybe it only works in one city or a region.
He raises possibilities like linking spending to your carbon footprint allowance, or health metrics, or even allowing automatic deductions for vaguely defined public needs.
That's chilling. He quotes Congressman Tom Emmer, right, warning about governments not just tracking, but potentially controlling or outright blocking transactions with programmable CBDCs.
Yeah, Emmer's warnings really underscore that potential for serious overreach.
And Rodriguez isn't just talking hypotheticals. He points to actual real-world attempts, right?
Right.
Like Nigeria.
Exactly. He discusses the pretty problematic launch of Nigeria's Inera. It faced really low adoption, lots of public resistance, especially when the government tried to force the issue by limiting cash withdrawals.
Which backfired badly, as I recall.
Massively. It serves as a real cautionary tale about the challenges of trying to force adoption of a digital currency, especially when people don't trust it or want it.
It's a contrast, then, with the Bahamas and their sand dollar.
Right. Rodriguez describes their approach as much softer, more gradual. It was positioned as a supplement, mainly aimed at improving financial inclusion across their many islands.
But even there,
he notes the uptake has been limited. And you still have these trade-offs, like lower privacy for unverified accounts versus higher transaction limits if you give up more data. It just highlights the inherent complexities, even with a gentler approach.
Okay, so let's pivot now to focus on Rodriguez's overall analysis, his main critique. It really comes down to the potential loss of financial freedom and privacy, doesn't it?
Absolutely. That's the core argument running through the entire book. He argues that CBDCs, especially if they get combined with programmability and these social credit type systems,
Which we talked about.
right, they could create an environment of near total surveillance and ultimately control over individual finances.
And the risk of government overreach, the surveillance aspect, that's a constant theme.
It is. He even points to an IMF report, not exactly a radical source, that acknowledges the potential for both commercial and governmental surveillance with CBDCs.
So even the institutions involved see the risk.
They acknowledge it, yes. And the inherent challenge to financial anonymity,
Wow.
even with these proposed ideas like controlled anonymity, which sounds a bit like an oxymoron.
Yeah, controlled anonymity. What does that even mean?
Exactly. That's being discussed through the European digital euro, but Rodriguez is deeply skeptical about how much real privacy that would offer.
Then there are the geopolitical angles. Rodriguez sees CBDCs playing a role in a new kind of currency war, right?
Definitely. He frames them as a potential new battleground for global influence. The digital yuan, for instance, could potentially challenge the long-standing dominance of the U.S. dollar over time.
And he mentions things like the Enbridge project.
Yeah, that's an initiative involving several central banks, including China's, looking at ways to streamline cross-border payments outside the traditional SWIFT system, which is largely U.S. influenced.
Interesting. And other countries are looking at this too, like Russia and Iran.
Right. He mentions their efforts to develop national digital currencies, partly as a way to try and get around international sanctions. And the BRICS nations, Brazil, Russia, India, China, South Africa, they have apparently discussed the idea of a unified digital currency among themselves. So there are definitely big geopolitical shifts potentially at play.
But it's not all smooth sailing. Rodriguez also points out significant technological hurdles, doesn't he?
Oh, absolutely.
Mhm.
Implementing CBDCs on a massive scale is incredibly complex. You've got issues like scalability. Can the system handle billions of transactions? Cybersecurity is a huge one. Imagine the target a central digital currency system would be.
Nightmare scenario.
Totally. Then there's that tricky balance between privacy and regulatory oversight, the need for it to work even if the internet is down offline functionality.
Yeah, what happens in a power cut?
Good question. And just integrating it with all the existing financial plumbing, these are major challenges. And Rodriguez emphasizes the potential for serious vulnerabilities if they're not handled perfectly.
Beyond the tech, he also talks about the social and economic fallout.
Yes. He considers the potential negative impacts. Like, what about older people or others who aren't digitally savvy or lack access?
Digitally excluded.
Exactly. What about small businesses that rely heavily on cash? The whole informal economy. And even just the broader psychological effects. What does constant financial surveillance do to people's behavior? Does it lead to self-censorship?
That's a heavy thought.
It is. And the chapter he dedicates to China's social credit system really serves as his prime exhibit for these fears.
Right, the real-world example.
He details how that system already impacts so many aspects of daily life there. Travel bans, loan access, getting into good schools, even your internet speed, potentially,
Based on your score.
based on your score.
Mm.
And the potential integration of that kind of system with a fully digital, government-controlled currency, well, that paints the really disturbing picture of pervasive control that Rodriguez is warning could spread.
But he doesn't just leave us with doom and gloom, does he? He talks about resistance, alternatives.
He does. He explores potential avenues for pushback or alternative paths. Things like the continued use of decentralized cryptocurrencies, maybe privacy-enhancing technologies being developed.
Like privacy coins.
Potentially, yeah.
Mhm.
Or just the persistence of the informal cash-based economy. He even mentions more radical ideas like fostering actual competition between different types of currencies. And he points to places like Venezuela, Lebanon, Argentina, where people have found ways to operate outside failing official systems out of sheer necessity.
So workarounds emerge.
Sometimes.
Yes.
And finally, to kind of structure the possibilities, Rodriguez offers three potential future scenarios.
Okay, what are they?
First, the bleakest one, a digital concentration camp, basically total control.
Yeah.
Second, a scenario he calls parallel worlds, where you have the official CBDC system, but also a thriving shadow economy existing alongside it.
Right.
And third, a democratic compromise, which would try to find some kind of workable balance between the state's desire for control and the preservation of individual freedom.
It's a useful framework, helps you think about where things might head.
Definitely. And in concluding his analysis in the book, Rodriguez actually offers a direct recommendation straight to you, the listener.
Oh, really? What does he say?
He states, and I'm quoting here, "I would highly recommend this book to anyone interested in global economics, finance, and international relations. It is not just an academic analysis. It is a practical guide to understanding the hidden mechanisms that determine the economic fate."
Okay, so a strong recommendation for anyone interested in these big picture topics.
Yeah, he emphasizes that the book offers an accessible but still really well-researched look at this huge financial transformation that's happening right now.
It's not just theory, it's about real-world impacts on all of us.
Exactly. And as a final point, maybe something for you to think about after this, building on Rodriguez's conclusion, it really prompts us to consider which of those three futures he outlined seems most plausible.
The digital camp, parallel worlds, or compromise.
Right. And maybe more importantly, what role might each of us actually play in shaping that outcome? As Rodriguez suggests, history, the future of money and freedom, it's being written right now. So what part will you play in that story?
That's a powerful question to end on. So just to quickly recap our deep dive into Michael Rodriguez's digital dollar dystopia, we've really explored his compelling arguments about the potential risks of central bank digital currencies, focusing hard on his concerns about financial freedom, privacy, and that possibility of greatly increased government control.
Yeah, we looked at his historical take on how money evolved, his critique of the current fiat system's weaknesses, and those historical parallels he draws with today's CBDC plans. Rodriguez definitely raises some absolutely fundamental questions about where our financial lives are heading in this increasingly digital age.
So we really encourage you to mull over the information we've discussed today. If this topic has caught your interest, we definitely recommend checking out Digital Dollar Dystopia for yourself.
Or at least researching CBDCs more broadly, from various perspectives, to form your own informed opinion.
Absolutely. Thank you for joining us for this deep dive.
Thanks for listening.